Social Trading Mastery, Leveraging Collective Intelligence in Web3, Part 1. Social trading has evolved from a simple copy-paste mechanic into a sophisticated ecosystem of collective financial intelligence. In the 2026 decentralized landscape, it is no longer just about following a guru, it is about transparency, verifiable on-chain track records, and the democratization of hedge fund-level strategies. By leveraging the wisdom of the crowd, even a novice trader can tap into the expertise of market veterans while maintaining full custody of their assets. Chapter 1: The Evolution of Social Trading, From Shadows to On-Chain Clarity. The history of social trading is a journey from centralized opacity to decentralized transparency. In the early days of Web 2.0 social trading platforms, followers were often blinded by manipulated statistics and smoke and mirrors marketing. The Web 2.0 legacy, older platforms relied on centralized databases. A lead trader could hide losing accounts, delete bad trades from their history, or use demo accounts to lure followers with fake 1000% ROI screenshots. This led to the FOMO trap, where retail investors provided exit liquidity for failing strategies. The 2026 Web 3.0 reality: in the frameshift ecosystem, the blockchain acts as the ultimate truth teller. Every entry, exit, stop loss, and take profit is an immutable transaction on the ledger. If a trader claims a specific win rate, the smart contract verifies it instantly. This shift has turned social trading from a game of trust into a game of math. Decentralized custody: perhaps the most significant breakthrough is that followers no longer need to send their funds to a third party. Through smart contract architecture, your capital remains in your wallet, and only the trading signals are mirrored. You retain 100% control over your private keys. Chapter 2: The Three Pillars of Modern Copy Trading. To navigate the social trading world without losing your capital, you must understand the mechanical infrastructure that powers the mirroring process. It isn't magic, it's a high-frequency synchronization of data. The lead trader, the alpha generator: this is the strategist who has mastered technical indicators like the RSI, Article 11, and market structure, Article 12. They aren't just clicking buttons, they are managing a portfolio with a specific risk profile. In the modern era, a lead trader is essentially a decentralized fund manager. The follower, the capital allocator: your job as a follower is not to trade, but to audit. You are an allocator of capital. You must decide which alpha is sustainable and which is a black swan waiting to happen. The execution engine, the bridge: this is the layer of smart contracts that ensures zero latency execution. In 2026, slippage is the enemy. The execution engine ensures that if the lead trader buys FST at 10 cents, your account executes at the same price, or within a microscopic range, preventing the front-running issues that plagued early DEXs. Chapter 3: Vetting a Lead Trader, the 2026 Professional Framework. In the world of Web3, green charts can be deceiving. A trader might show a 500% monthly return, but if they achieved it by risking 90% of their capital on a single high-leverage trade, they aren't a trader, they are a gambler. To protect your capital, you must use the frameshift vetting protocol. Maximum drawdown, MDD: this is the single most important metric. MDD measures the largest peak-to-trough decline in a trader's portfolio. If a trader has a 100% ROI but an 80% MDD, it means at one point, their followers were down 80%. Professional followers look for smooth equity curves where the MDD never exceeds 15 to 20%. Win rate versus risk to reward, RR: a trader with a 30% win rate can be more profitable than one with a 90% win rate if their RR is high. Check if the lead trader lets their winners run and cuts their losses early, or if they hold losing positions hoping for a bounce. Trade frequency and style: is the lead a scalper, hundreds of trades a day, or a swing trader, holding for weeks? High-frequency traders can lose significant portions of your profit to network gas fees and slippage. In 2026, we prioritize quality over quantity. Chapter 4, The Psychology of the Crowd, Avoiding the Herd Trap. Social trading often triggers the most dangerous human emotion, herd mentality. When a lead trader becomes viral and gains thousands of followers, the dynamics change. The exit liquidity risk: when a trader with $10 million in follower capital buys a low-cap gem, they create a massive price spike. When they sell, the followers often end up being the exit liquidity, selling at much lower prices due to the massive sell pressure. The guru complex: success breeds overconfidence. Many lead traders, after a long winning streak, start taking unnecessary risks to maintain their godlike status in the community. The basket approach: the 2026 professional strategy is to never follow just one person. We create a basket of leads, for example, one specialist in BTC, one in ETH/L2S, and one in stablecoin yield farming. This diversification ensures that if one trader has a bad week, the others can offset the loss. Chapter 5, Advanced Risk Management, The Follower's Shield. Even if you follow the best trader in the world, your account needs its own protocol-level protection. Fixed versus proportional mirroring. Fixed: investing a set amount, example $500, per trade. Proportional: mirroring the exact percentage of the lead's wallet. This is safer because it keeps your risk in sync with the strategist. The global hard stop: in the Frameshift ecosystem, you can set a portfolio circuit breaker. If your total copy trading balance drops by a certain percentage, example 10%, the smart contract automatically disconnects you from all leads and converts your positions to USDC to prevent further bleeding. Slippage protection: always set your maximum allowed slippage to 0.5% or lower. In fast-moving Web3 markets, entering a trade 2% later than the lead can be the difference between a profitable week and a losing one. Chapter 6, The Frameshift Hybrid Strategy, AI meets Human Intuition. In 2026, the most successful social traders aren't just following people, they are following hybrid systems. The pure human-only or bot-only era is over. Aggregated sentiment analysis: at Frameshift, we combine social trading data with crowd sentiment. If the top 10 lead traders are opening long positions, but the general retail sentiment is in extreme greed, our system flags a potential exhaustion point. Divergent lead detection: what happens when two expert traders disagree? If lead a trend follower, buys, but lead B, a mean reversion specialist, sells, it indicates the market is entering a choppy or sideways phase. High-level followers use this divergence as a signal to reduce their position sizes. The on-chain alpha bridge: we don't just watch our lead traders, we cross-reference their moves with whale wallet activity. When a lead trader's move aligns with a massive institutional buy order on the Polygon network, that is a AAA high-conviction setup. Chapter 7, Rising to the Top, Becoming a Lead Trader. Social trading is a meritocratic ladder. For those who have mastered the technical foundations of RSI and market structure, the path to becoming a lead trader is the ultimate way to scale wealth. Reputation mining: every successful trade you make on the Frameshift protocol builds your on-chain credit score. Unlike Web 2.0, this reputation is portable and permanent. You are essentially building a decentralized CV of your financial intelligence. Performance-based incentives: lead traders earn a percentage of the profits they generate for their followers. This creates a win-win ecosystem where the leader's success is directly tied to the community's growth. The ethical trader mandate: in a decentralized world, pumping and dumping is easily spotted. Lead traders who provide consistent, sustainable growth are rewarded with higher visibility in our discovery algorithms. Chapter 8, Conclusion: The Collective Brain of Web3. Social trading is far more than a feature, it is the democratization of financial power. By removing the intermediaries and high fees of traditional hedge funds, we have created a global, decentralized collective brain. Whether you are a follower learning from the masters or a lead trader guiding the squad, you are part of a financial revolution. In 2026, the lone wolf trader is a myth. The future belongs to the communities that share knowledge, verify data on-chain, and grow together. Master the flow, respect the structure, and trade as one. If you enjoyed this audio masterclass on social trading, don't forget to hit the like button and subscribe to our channel. Stay tuned for more on-chain alpha and Web3 strategies.